I'm George Newberry. I'm the founder and CEO of Pre-REO. I've been in real estate for 32 years. I've been buying distressed mortgages in mass since 2010. I bought more than 10,000 defaulted mortgages. With Pre-REO, I've kind of taken all those experiences, good and bad, and weaved them into a program that can be a success for not only the pre-REO buyers, not only the institutions that are selling the loans, but most of all for you as an investor in our fund. Pre-REO is the nation's leading marketplace for the sale of distressed mortgages from institutions to real estate investors. Think of it like auction.com, but for distressed mortgages. Auction.com is the nation's premier outlet for REOs from institutions. What we want to do is have those institutions sell the notes before they become REO. Let's say it's a $200,000 home that is an option of purchasing. The note on that home could be purchased by another investor for $150,000. Let's say the note's $220,000. So $220,000 note, home value $200,000. That distressed mortgage is sold typically at a discount of around $150,000. But we're giving you at Pre-REO the opportunity to invest at an even greater security level. So when that loan is sold for $150,000, a Pre-REO investor will put down 25%, $37,500. Your investment dollars will go towards that $112,500 financing of the Pre-REO buyer. Now, that investor is going to start paying 12%, and we take out from that 9% and pay it to you as the investor. That's where your 9% comes from. Your money is secured by a fractional piece of every single asset, every single financing that we invest in. And I think that's what really strengthens this. A, you're really deleveraged. You're 112,500, 56% of the property value. That's where you're investing. And then you're investing over hundreds or thousands of assets, and you have a little piece of, or a big piece of each and every one of them. That's how this is structured. An investment in Pre-REO pays up to 9% annually, and it's distributed monthly. The minimum investment is only $100. It's open to accredited and non-accredited investors. Right now, the market is on its longest expansion in our country's history. It is due, in fact, it's overdue for a contraction. Now, history tells us that, again, market expands, market contracts. In 2006, that was the last super high point of the market, and the rate of appreciation had creeped up 2004, 5, 6, and then it started slowing. Property values were still going up, but at a slowing rate, and that happened in late 2006 through 2007, and in 2008, they slowed so far that the market actually started declining. We're seeing the same thing. History is repeating itself right now. The market increased dramatically for years, up until COVID, and then COVID, surprising to many, including me, it kept going up. In fact, it accelerated the rate of appreciation, but that appears to have peaked. It peaked probably late in 2021, and the home values are still going up, but the rate of appreciation is slowing. When that slowdown turns into a decline in prices, we haven't seen that yet, but it's forthcoming. When that happens, we expect that there will be an extraordinary number of distressed mortgages, and the next contraction, we want to be ready. The mortgages being sold on Pre-REO come from institutions. These institutions are Wall Street-backed hedge funds, banks, and other institutional investors who have the vast majority of the non-performing mortgages in our country. And we have created a system which allows them to sell these to real estate investors on Pre-REO. There's other opportunities for real estate investors to buy defaulted mortgages, but they're buying many a times from groups that bought them from the institutions and are now selling them on a one-off basis at a markup. There are also some groups, some platforms that sell from private party to private party. The exciting thing about Pre-REO is to go from institutions, big Wall Street-backed firms are now selling distressed mortgages effectively one by one to real estate investors. The biggest element of pre-REO that has helped us succeed is adding a trust. All the assets that are transacted on pre-REO get sold into one trust. The trustee is U.S. Bank, and that's a way to protect your investment. It's not going to be, hey, we're going to have to wait 6 months or a year or 2 years to complete some litigation to get back the interest. We already hold the interest. That is the safety and security that is part of the pre-REO system for all of you as investors. There's no one else doing what we do. We have investors in our prior offerings who've invested $100 and investors who've invested over $1 million. Either is an option. Invest as much and as frequently as you like. If you're interested in learning more, click below. A final word. Investing in pre-REO involves risk, including the risk that you could lose some or all of your money. Please review the risks of investing section of our offering statement before considering an investment. There's no guarantee that we will earn enough profit to distribute a 9% return to investors or even return their capital. The company will try to return to investors all of their capital no later than the 5th anniversary of the purchase date, assuming there is sufficient cash flow. However, investors may receive their capital sooner, later, or not at all. Now, our interests are aligned. We make money if we pay you back and you get a 9% return. That works. We all win. Investors who are buying these pre-REO notes are paying us 12%, so we should be able to comfortably pay you the 9% return. However, this is not a bank. This is not FDIC insured, so be aware of that. This is not cash. This is not a cash equivalent. This is not a CD. You get a 9% return because it is higher risk than a CD. So please, we encourage you, we want you to make an investment, but we want you to make an informed investment. So take a look at the offering statement, review it. If you have questions, please reach out to us and ask. And then if you believe it makes sense for you, go ahead and make an investment. We look forward to working with you.